Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. President Trump orders a 25% tariff on steel and aluminum imports into the U.S., and he says cars and chips could be next. Opponents argue the tariffs violate global trading rules. We'll put that legality of the levies to Jennifer Hillman, a Georgetown law professor who has served at the WTO's appellate body. Now, the global automobile industry is on edge as trade wars escalate. The CEO of India's biggest SUV maker will be joining us to explain whether tariffs are making the Mahindra group think twice about selling their cars in the U.S. Plus, OpenAI rejecting a $97 billion takeover bid led by Elon Musk, who says he wants to return it to being a force for good. Well, just today, after signaling new tariffs were coming, President Trump has carried through on his threat with a fresh round of levies on key metals imports, escalating a brewing global trade war.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
Trump also warning the rate on metals tariffs could go higher. Reciprocal levies may be coming in the next 2 days, as well as more measures on other sectors, including cars and chips. The metals tariffs are expected to go into effect March 4th and will apply to all U.S. imports of the two metals, including from Canada and Mexico. Still, Trump hinted Australia may get an exemption.
We have a surplus with Australia, one of the few. And the reason is they buy a lot of airplanes. They are rather far away, and they need lots of airplanes. And we actually have a surplus. It's one of the only countries which we do. And I told him that that's something that we will give great consideration to.
Let's get perspective from Jennifer Hillman, co-director of the Center on Inclusive Trade and Development. She recently served on the World Trade Organization's appellate body and as a commissioner at the U.S. International Trade Commission. Jennifer, good to have you with us. We know that, Trump is rewriting the global trade book. I'm just wondering as well, with those tariffs, it pushes the U.S. to its most protectionist stance since World War II. How are you reading Trump's tariffs so far? How legal are they?
Well, I would argue that they're not legal either under U.S. law or arguably under any other international law. I mean, the United States committed as part of being a member of the WTO that it would charge only the amount of tariff that is in its actual tariff schedule, part of a negotiated bargain where the United States said, we'll lower our tariffs on certain products if you'll lower yours on something else. And at the result of that big sets of bargaining over a number of years, the United States set its tariff schedule at an absolute level. For example, on products involving steel, the United States' tariff rate is set at 0% duty. So anything that we charge above zero is a violation of that particular binding tariff commitment. And yes, there are certain exemptions under the WTO rules if you've shown that the imports, for example, are being dumped into your market or the imports are being the result of subsidies coming into your market, you can put other duties on. And the U.S. has done that frequently with respect to China. But what those rules do not allow you to do is what Trump has done here, which is to say 25% tariffs on all steel and all aluminum from everyone in the world. That is an absolute breaking of our commitments as part of the WTO. It also breaks the commitments that the United States made to its free trade agreement partners, like Canada and Mexico and Australia and Korea, all of which are major suppliers of steel and aluminum to the United States as part of a free trade agreement. I mean, the word free basically means free of tariffs. You're supposed to have zero duties on steel and aluminum. So in this action, President Trump has also violated all of the commitments that the U.S. made in all of its free trade agreements.
Legal or not, Jennifer, chances are Trump will push through his tariffs. The thing is, what can the trading partners do? What can the WTO do? We know that during Trump 1.0, during the Trump's first administration, China did lodge a complaint at the WTO, and it had very little relief from that action.
Right. And China, for what it's worth, has already filed an action at the World Trade Organization challenging the 10% tariffs that were put on all Chinese product as a result of a proclamation last week. So it is clear that the WTO is at least going to weigh in on this issue of, are these tariffs consistent with the United States' obligations? Again, so for whatever it's worth, there will be, I think, a ruling out of the WTO for those that still believe that we ought to at least try to have a rules-based trading system in which, again, generally people agree that these are the set of rules that we're going to operate under. So I do think I would expect those actions by China and by others to challenge these tariffs as a violation of the WTO's rules. The problem is that the United States, in addition to these tariffs, has also, and again, the Trump administration did this last time around, effectively killed the binding aspect of the WTO's rule system, because it used to have this appellate body that would sit in judgment over appeals from any of these cases. And now the United States has blocked anybody being appointed to the WTO appellate body. So there isn't a quorum of members to decide these cases. So what happens now is if China wins this challenge, and the panel were to rule that these tariffs are, again, a violation of the United States' obligation, and the panel would basically say, United States, you need to remove these tariffs because they're a violation, then what happens next is the United States could appeal that decision. And under the WTO rules, while that appeal is pending, while it's being considered, the United States and China are not supposed to take any actions with respect to that particular case. And given that the United States has blocked anybody from sitting on this appellate body, the appeal arguably can pen forever because there's nobody to hear it. So again, you've got one problem with, again, the WTO dispute settlement system being, again, in this kind of limbo, moribund state as a result of the U.S. actions. And then the other part of the equation is going to be most of the countries are already looking at potentially retaliating against these imports against these tariffs that Trump has put on. Again, Mexico, Canada, the European Union, they've already said we have our retaliation lists. So they are going to not wait for the WTO ruling, but they're going to go ahead and put tariffs on U.S. exports as a way of trying to say to President Trump, look, you cannot do this. And if you do it, we are going to respond in kind.
The thing is, what is the right response to Trump tariffs? I mean, right now, it's kind of a like bilateral arrangement. Could that be a more multilateral approach, a more multilateral response to it? Could Asia, Europe lead in this response?
Well, again, one hopes so, because, again, I really fear that this response of the United States imposes tariffs, others in the world put on retaliatory tariffs, and the U.S. puts on yet more tariffs, then more people put on retaliatory tariffs, puts us on the road that the world was in the 1930s, when the United States started out this tariff war by imposing what we call Smoot-Hawley tariffs. The rest of the world responded, and then the U.S. responded, and we ended up with a tremendous exacerbation of the Great Depression. The entire world going into a downward spiral in terms of growth, everybody's economies suffering very greatly. And my fear is that we could be on that road. So again, I do believe that it would be much, much better to try to find, again, a response that would push back on the United States, but that would nonetheless allow some kind of a negotiation to come to some kind of a settlement of it. Part of it is it's just very hard because you don't know why is President Trump doing this. Again, the initial tariffs that were imposed on China were imposed on the argument that China has not done enough to combat exports of fentanyl and other illegal drugs coming to the U.S. market. But these tariffs on steel and aluminum, there is no argument that any country that's shipping us steel or aluminum has done anything wrong. These are done solely to protect the U.S. steel and aluminum industry, so it's not clear what any country can do in response. The only thing that is very clear is that a lot of this is driven by China. and by excess capacity in China. Because China is definitely producing far more steel than is, if you will, its fair share,
Right.
far more steel than the world can absorb. And all of that Chinese steel coming and flooding everyone's markets is kind of depressing the prices for everyone in the world. So one of the things that the world could do collectively that would make a difference is to collectively put pressure on China to increase its own domestic demand. And to decrease its domestic production so that Chinese goods are not flooding the market, particularly in steel and aluminum, and causing this global disruption in the amount of steel and aluminum that's just sloshing around in the world.
Jennifer, we know that Trump's pet peeve is trade surplus, and part of the reason for that trade surplus is that countries and companies find it attractive to be investing in the U.S. It is an attractive market for them. The reverse may not necessarily be good for the U.S.
Oh, you're totally correct. In fact, many economists would say that if anything, some of these trade deficits are an indication of how strong the U.S. economy is, what good shape it's in. They are not a sign of weakness or that countries are taking advantage of the United States or many of the other things that President Trump is saying. So many would say that he's just wrong about this notion that you should judge, if you will, everything by whether or not we're running a trade deficit with a given country or not. And it is not the case that most people believe that any country with whom we have a trade deficit is somehow cheating or stealing from the United States. Again, when we import these goods, American consumers are getting goods that they wanted to buy. So again, I just think on this point, Trump is wrong to fixate on these trade deficits in the way that he is.
What does it mean for global trade in the end? What does it mean for global economy? I mean, we're already seeing tit for tat, and that's not good news. Are we looking at a potential depression for the global economy, you think? How might this play out?
So again, I don't know, but again, it's very worrying to everyone. And again, if you look at the studies that the IMF and the World Bank and the WTO and others have put out, they have clearly indicated that if we go down this path of fragmenting everyone into these kind of trading blocks and creating all of these barriers to trade, that fragmentation alone has the potential to reduce global GDP by up to 5 percentage points and GDP for many of the developing countries by 10 or 12%. So this is a dangerous path to be on in terms of what it says about economic growth. And so the issue, I think, for the whole world is how do we best get off of this path? It will be damaging for the United States as well. I mean, there's no question that the last time these tariffs were put on steel and aluminum, yes, it did allow for an increase in U.S. prices for steel and aluminum and an increase in U.S. production, but it cost more in terms of the amount of production that was lost from all of the companies that use steel and aluminum to make their products. So this is going to be damaging to the U.S. economy. It is going to be pushing the U.S. economy down. And part of my hope is that many of those that are on the damaged side of the U.S. economy will stand up and say to President Trump, look, you promised us that in fact we would end up with lower prices and greater productivity and greater production, and your tariffs are doing just the opposite.
With more tariffs coming, I am sure we'll be continuing this discussion. Jennifer Hillman, Center on Inclusive Trade and Development, we thank you so much for your insights today. Still ahead on the show, we'll speak exclusively with the CEO of India's biggest SUV maker, Mahindra Group, hear how they're bracing for President Trump's potential car tariffs later in the show. Keep it here with us. This is Bloomberg. Investors are gauging the impact from Trump's latest round of tariffs and his warnings of more to come. Avril Hung has more on the market reaction. Avril, Trump's turned it into a risk-off day. I hope you've been buying gold as a form of protection.
Yeah, I mean, I can tell you who has been buying gold in a little bit, but you look at that safe haven play, it's really a function of the risk-off today and how investors have been turning cautious. No thanks to Trump. You see the region's gauge, excluding Japan, well off the session highs in negative territory. US stock futures down. The Bloomberg Dollar Index looking firmer. It's up about 4% since Trump's election. This week is also going to be about the US inflation data, Powell's testimony before Congress. But worth noting as well what we're seeing on the yuan in terms of the fix. We've gotten yet another higher fix from the PBOC for a third day. So maybe loosening the reins a little on the renminbi. Flip the board as far as Chinese stocks are concerned, given that these latest rounds of tariffs are not putting China directly in the line of fire, maybe that's supportive for their stocks. But we're seeing it part of the risk off today. The EVs are the big drag, no thanks to developments from BYD, but also a bit of profit taking underway. You look at the Hang Seng Tech, it's climbed for almost all of the past 6 sessions. It's coming back from the long holiday. And to give you a sense of the strength in the Hang Seng Tech, it has been beating Nvidia on a relative basis. You also have the likes of billionaire investor David Tepper scooping up more exposure to China stocks, ETFs, including JD, Alibaba. Now flip the board again, as I say, it's really a safe haven play, and China has been scooping up gold. If you want to have a sense of what we're seeing in the bullish signals for the bullion, for the past 3 months, it's actually been buying up gold. And this is despite the elevated gold prices. So a sense that it's committed to diversifying its reserves beyond US Treasury. So as I say today, risk off and Trump fueling that safe haven bid. We're seeing gold not far from that $3,000 level, already at a record high, Has.
And we know that China's not the only one buying gold. In fact, a lot of central banks have been scooping up the yellow metal. Avril Hong, thank you so much for that. Let's get insights from Charu Chanana, Chief Investment Strategist at Saxo. Let's start with gold. $3,000 in sight. The question is when?
I would say it, I mean, looking at how divergent gold has been, to US dollar, to US yields, it has been obviously ignoring all of those factors that should ideally be pulling it down right now. Certainly, I think the fundamentals here from the safe haven trade, what Avril said, from the central banks, beyond PBOC, which is obviously one of the big buyers, we've seen that for several months now. I think there are factors to say that, in this environment where, there are tariff risks, there is uncertainty, where do you really hide, right? And it has to be a safe haven that has some fundamental legs supporting it as well, and a little bit more immune to those tariff risks. And I think that kind of all, goes in favor of the gold right now.
Where do you hide? You hide in the dollar, you hide in the yen. Those are the traditional haven plays, but, the dollar could be peaking. Maybe it is time to sell.
I mean, the yen has started to show that it is a safe haven again with these tariff risks around the corner. But then again, there is so much uncertainty with the tariffs, given that we saw these steel and aluminum tariffs come through this week. There is a possibility that even Japan could be in the firing line with those tariffs, right? Obviously, that meeting that Japan's Prime Minister Ishiba had with Trump over the weekend did prove to be a little bit of a supporting factor, and as a supporting the feeling that Japan could be immune from those tariffs. But certainly, I think there is a little bit of a risk in trying to pick that safe haven trade. US dollar, you talk about that, and certainly that's getting a lot of attention as well. It has been the US exceptionalism story that's been driving the dollar, and now, of course, this safe haven trade as well kind of supports the dollar. But with the Japanese yen, I think gaining some traction, there is a sense that the bearish turn for the US dollar may be around the corner. Especially, I think there is a sense from the Trump administration as well that they do want to cut that fiscal outlay that they've had. That is something that's been driving US exceptionalism, and that's been something that's been driving the US dollar higher. And if they do get the 10-year yields down, I think that could really bring a massive turn lower in the US dollar.
And speaking of US exceptionalism, we've seen how hedge funds have been buying into US stocks at the fastest pace in a very long time. I'm just wondering how long this US exceptionalism will last. How do you play it? And when do you see a correction?
I think the US exceptionalism has really been driven by, the CHIPS Act, by all of that fiscal spending that we've seen during the Biden administration. If we continue on that, I think there is good reasons to believe that the momentum in the US economy and the US markets could continue. There's going to be obviously some volatility because valuations have been, quite stretched now, and there are other regions catching up. Europe is catching up. China's tech sector is catching up, for instance. And especially, I think this turnaround could be massive if we do see that pullback in fiscal spending. If that does not come through, obviously Trump has his own plans and his administration. The Doge is obviously trying to cut on the fiscal spending. But if we do continue with that fiscal spending, it certainly remains a tall ask to really cut that through. I think the US exceptionalism story still has some ways to go.
China isn't it catching up? It's had a very strong start to the year, and we heard the likes of David Tepper talking about how you should buy everything China. I mean, he raised his stakes in JD.com by more than 40%, in Alibaba, by almost 20%. Is that the way to go? Is it time to buy China?
I would say David Tepper certainly still is one of the outliers, and the other hedge funds, they did go all in on China during that September period when we saw that major stimulus coming through. But since those stimulus announcements have slowed down after that, most of the hedge funds have again been cutting their long positions in China. It certainly looks like a very interesting story given valuations, but that valuation story has been there for a very long time as well. I think the earnings growth is also starting to look a little bit more optimistic at that point, but I would suggest that, I think to be a little bit more selective, the long-term strategic place for China, particularly, tech, advanced manufacturing, say the electric vehicle side, or even the renewables, they could certainly be areas of focus, especially as these geopolitical issues continue to ramp up and there are deglobalization forces coming more and more into play. I think these strategic sectors could continue to be a very important part of the China story, but moving on to the consumer-facing sectors, I think we still really need to see a stronger intent on stimulus from the Chinese authorities.
With all the tariffs from Trump that we're seeing right now, people are going back to the playbook of China plus one, China plus two. Do you buy Vietnam? Do you buy Malaysia? What do you buy as a result of that?
I mean, I think this new administration, the Trump administration, is a little bit different from Trump 1.0. I know we did buy Vietnam at that time when there was this reshoring and nearshoring efforts. I think there was a lot of focus on even some of the LATAM names, Mexico. But of course, now Mexico is having its own trouble, something bigger in scale compared to even China. I think Trump's policies on tariffs are very much focused on his America First policy. So national security being one of the key issues, and the other being to bring manufacturing back to the US. In that sense, I think I would still think sticking with the US, but these sectors, these investing themes that kind of comply with this, something like manufacturing, again, which is moving back to the US, logistics, which will be needed as these supply chains kind of jiggle around, defense and cybersecurity, which will again remain a key theme. I mean, even though the Trump administration wants to cut fiscal outlays, they want to increase the US defense spending. So I think these key strategic sectors will be the driving investment themes, but I would still be sticking to the US unless we have more clarity on the tariff front.
Because you also have to stay nimble. It is the Trump administration 2.0. There'll be a lot of, surprises. Charu, thank you so much for that. Charu Chanana from Saxo. Let's take a look at how Asian benchmarks are doing under pressure for a second day on the back of Trump tariffs. Of course, the 25 tariffs to be imposed on steel as well as aluminum. MSCI Asia Pac Index down 0.3%. Now, still ahead this hour, an exclusive interview with Mahindra Group MD and CEO. We're talking about Anish Shah. We'll discuss how Trump's tariffs will impact the company's outlook. Much more ahead. Keep it here with us. This is Bloomberg. Welcome back. French Finance Minister Eric Lombard says France will keep a digital tax that hits major U.S. tech firms, despite past threats of tariff retaliation from President Trump. Speaking exclusively with Bloomberg, Lombard told us more about Europe's stance on trade talks with Washington.
President Trump is a deal maker, so Europe will answer as strongly as the position of the United States, and either we'll have our own tariffs or we negotiate. We'll see according to the reaction of the United States to the answer we are preparing.
Europe already has reciprocal tariffs in place on US steel from the previous trade conflict. They are now frozen. They could be unfrozen in March. Is that an easy response for Europe to go to? You unfreeze those reciprocal tariffs and let them snap back in?
I will not give the answer before we have the official answer from Europe.
How much pain is Europe prepared to inflict on the US?
We are prepared to do whatever is necessary in order to be balanced. We have the same tools, we have the same weapons if need be, and we will use them very calmly.
And we can assume that the European Commission has a list of targets that they would enact tariffs on.
We are ready because we knew that was coming, so we are ready.
Okay. President Trump has asked for a probe into taxes globally. And one thinks of the digital taxes that France has that overwhelmingly impact US tech companies and bring in, what, 500 to 700 million euros a year. Would you and France consider dropping that digital tax in order to avoid a trade war?
I'm not sure that the tax issue is related to the trade war, but we have put together a tax actually on the digital companies that we are maintaining because that is the law of France, and we'll see whether that comes into another type of conflict with the United States. I hope it will not, because tax is a question of sovereignty, and every country has its own tax system. We have our own, and we will stick to that.
And that was French Finance Minister Eric Lombard speaking exclusively with our very own Tom McKenzie. Now, European Union cars and industrial machinery could be subject to U.S. tariffs if Donald Trump targets the bloc. In fact, President Trump hinted at potential duties on vehicles.
Well, we're looking at numbers, and we'll be coming up with a number, but we make some of the finest cars in the world, and some companies prohibit us from selling those cars in their countries, but they sell us cars, they send cars to us, and we don't do that. We charge nothing or 2.5%, and they'll be charging 100%. They'll be charging much more than that if you look at some of them. So I think those days are over.
As President Trump escalates its trade wars, let's get the view from India. Mahindra Group, along with being India's largest SUV maker, is also in sectors including aerospace, defense and construction equipment. Joining us exclusively from Mumbai is CEO and MD Anish Shah. Anish, good to have you with us. We heard right there, that tariffs on cars could be coming. Is it making you think twice about selling cars in India, in the US?
Not at all. We are actually very local in the US for everything we do. And we've been there for 30 years now. We have multiple manufacturing facilities for our farm equipment business, which is one of our largest businesses. And our IT services business, Tech Mahindra, is also local. And the vast majority of our associates in the US are US citizens as well. So our approach has been to be local in the US. And this is something that plays exactly to that approach we've taken.
How about the approach that you take to your business? I mean, tariffs add costs to companies. I'm just wondering how the prospects of tariffs and more tariffs to come from the U.S. Is shaping the way you look at your business.
I think in general, Haslinda, I'd say tariffs do end up restricting economies, but there are reasons at times for tariffs to be there. So this is something we should just work through. From our business standpoint, we are in fairly good shape because our focus is essentially to be local in markets that we play in a significant way. And that's something that we do around the world in countries that we are in.
How about in terms of EVs? We know that Trump is not a fan of EVs. In fact, he wants to eliminate the subsidies, the incentives. He wants to, eliminate the build out in terms of EV charging stations. How are you looking at how this might impact the demand and the investment in the EV space?
In India, EV is still nascent. If you look at electric three-wheelers, we've gone from a 0% to a 25% penetration in 3 years. That's a very rapid change. And in electric three-wheelers, which is really about the last mile, about pollution in the cities, we expect that to go to 100% in literally about 5 years or so. And in about a year's time, we will not need any more incentives. So this is a classic case of incentives working to transform the industry and to have a significant policy impact, because the policy impact here is to reduce pollution in city centers. In electric four-wheelers, India is today at 1.5% penetration. And here again, the focus for India will be on reducing pollution as well as reducing the fuel import bill. And in that context, we see a good path. The incentives that have been put in place are good, and we don't see the need for any more. We've got a set of very strong products that we've just launched. And with that, we expect electric penetration to go up in India, but we have a long way to go before we catch up to the US or some of the other markets around the world.
But you're also a player in the US space. I mean, how might that affect your, EV ambitions in the US?
We are not selling EVs in the US right now, but when we do, we will be local in the US. We will manufacture in the US at that time.
And when that plan materializes, and if that were to happen in the next 4 years, we know that when it comes to metals, with those tariffs being imposed on steel as well as other materials, I'm just wondering how that might impact your cost, Anish. I mean, after all, steel is a big portion of the cost for car makers.
First, in India, we've been able to manufacture at a very low cost compared to many of our peers, and we've been able to deliver very high quality as well. So we have certain strengths from a manufacturing perspective, and these are the strengths that have helped us build our business here. And that's something we expect will stand us in good stead when we go to international markets.
How are you being impacted by the weakening rupee? The rupee tested a fresh new record just yesterday. It's great for exporters, but when it comes to, paying for the price of materials, that is another story. It's also another story when you're talking about investing overseas.
So we do expect a roughly 3% depreciation annually, just based on differential in interest rates and differential in inflation. So from that perspective, this is still the norm that we've seen and something that we usually plan for. So no real impact on us at this point.
Do you expect the rupee to continue to depreciate, given that the RBI is intending to cut rates further? At least there are expectations that could be more rate cuts in 2025.
Well, the Indian economy is growing well and has a very strong path ahead. So to that extent, that would be one counter factor to the weakening of the rupee.
So you expect growth to be boosted in India in the coming quarters, and that could just be boosting the currency. What is your expectation on a stronger rupee based on?
So it is based on growth, Haslinda, because we are seeing very strong fundamentals in the Indian economy. We've seen a slight slowdown in the last quarter or so, but we look at that as a small blip along the way. A number of actions have been taken by the government on ease of doing business, on ensuring that manufacturing costs in India are brought down. The aspirations are to get to Viksit Bharat, which is a $32 trillion economy by 2047. And even actions before this around creating a digital stack have made a number of things possible to manufacture in India at a lower cost and therefore be able to export more. So as we start seeing the effects of that, that is going to be a counterfactor to the depreciation in the rupee that we've seen over the last decade or longer. As I said, there is an interest rate differential and there is a slight inflation differential over that time period, which has caused that. So we see some of the growth being able to counteract that factor. And by the World Bank estimates, India will grow faster than all other economies over the next 5 to 7 years. and India will add as much GDP to the world as will the EU in the next 5 to 7 years. So given those trends, we feel that India is positioned well right now and is on a good path to continue to grow.
Anish, we've not talked about the impact of the recent budget, putting $12 billion into the pockets of the middle class. How might this mean, what might this mean for your business? What might this mean for the demand for cars in India?
I think it's very positive. We play in 70% of the growth that we see in India over the next decade across multiple industries. And this is a demand stimulus that was needed. And this is one that will help us go beyond what we call the K-shaped recovery to having a more inclusive growth. And that combined with some of the other recent actions taken, I think is going to be a positive boost to the economy.
Can you quantify that boost? And how soon do you see that boost coming? Within the next 1, 2, 3 quarters, perhaps?
I would say it's difficult to quantify, but I do feel fairly confident that India can get back to an 8% growth rate. That is something that we see as eminently feasible, given the current economic scenario. And as that happens, we're going to start seeing a greater level of optimism and positivity in India as well.
But suddenly not back to 8% by the end of this year, Anish.
It's always very difficult to predict what happens in any given quarter, but I wouldn't rule that out.
Anish, you seem really upbeat about the prospects of the Indian economy. What are the risks out there? India is grappling with perhaps the job landscape. We know that 30% of graduates still are without jobs. And in terms of skills, there needs to be an upgrading of skills for India if it is to meet that 8% target. And of course, that 2047 target put out there by Modi. How do you see this playing out, and how quickly can India accelerate in terms of meeting those targets?
Let's look at data and history first. Over the last 30 years, India has grown on average 6.5%. So this is not a new territory in that sense. Then let's look at the actions taken over the last few years. From everything with regard to the digital stack, which has made it much easier to do business, to the specific actions that the government is taking on creating industrial parks, on making it easier to get permissions that were required, eliminating some of them, to reducing costs, creating greater logistics corridors. So all of those things, and infrastructure, of course, all of those things are contributing to creating a stronger economy. And that's what gives us the confidence that we will be able to get back to the 8% growth rate from 6.5. We have seen that as well in the last year. So it's not something that is far from where we are today. And we're seeing the impact of that on our businesses. We just declared our results for Q3. And from a Mahindra Group standpoint, we had a very strong set of results across all our companies, across multiple sectors in India. So we see actually a lot of positivity in India at this point.
And the biggest challenge for the economy is?
The biggest challenge for the economy is essentially our ability to deliver. And that's something I would put back on the private sector. The government, I think, has done a lot it has to. Private sector capex has to grow. That's one that hasn't so far. But as we see greater demand coming in, as we see higher capacity utilization, that's something that I think will happen as well.
Anish, we talked about how you're pretty active in boosting the EV market in India, your presence and your market share. There's a lot of competition. The likes of BYD and Tesla are pretty much interested in fighting for that space. And we heard from BYD today how it is starting a new price war with its free smart driving system. I'm just wondering how you're assessing the kind of competition you might see and the kind of pricing competition that you might see down the road.
For us, we welcome competition because we have grown over time and gotten much better because of competition. We've had the same question, Haslinda, for many years. 20 years ago, when a number of car makers came into India from US, from Europe, we were essentially written off as dead and saying that you're not going to be able to compete in this world with everyone coming in. Well, we've gotten better, and we've been able to do significantly better than our peers and competitors in India. And that's exactly the same thing we're looking at right now. The vehicles we've launched, we think, are of a very high quality. at a price point that is far lower than the quality that this would demand. And in that context, we are ready to compete with the Chinese or with anyone else.
You're ready to compete, but can you match up? Can you match up to the rivals, the likes of BYD?
I think we can match up, and I think we can be better as well. If you just, again, I would let our products speak for themselves. And that's what we've been saying over time when these questions have come up. And the feedback that we've got on the products that we put out there is extremely positive at this point in time.
Anish, we know that Prime Minister Modi is headed to D.C. He will be meeting with President Trump. What are some of the things you'd like to hear? What are some of the things that would bring comfort to companies like Mahindra?
I think India and the US share a very good relationship, and that's something we had seen in President Trump's first term as well. And as that relationship progresses further, we see a much stronger tie between both countries.
And of course, he is expected to meet with Elon Musk, who was due in India back in April. That was delayed because of issues to do with Tesla. Are you concerned that perhaps, he might just get concessions in getting Tesla to India?
We welcome competition, and that again has made us better. So from that perspective, we actually feel that having more electric vehicles in India will help build further electric. Our government has been very clear, as again has been President Trump, that manufacturing in the country is important, and therefore it is a level playing field. It has been a level playing field in India for manufacturers for a very long time. So from all of those perspectives, we've always welcomed competition, and we would do so.
Anish, given the optimism, what are your thoughts on, the investments in the next few years? And what are your thoughts on hiring? What might we expect because of your growth plans?
So we have fairly significant plans for investment that we have shared with our analysts and investors. We've actually tripled capacity in the auto business already in the last 3 years. And even with that, we are operating at close to 100% capacity. We are adding more capacity this year as our EVs come in. And in our farm business, also, we've increased capacity by 60% over the last few years. And one that we are looking at various different growth vectors there with international, with farm machinery. In many of our other businesses, we are starting to invest more in the sectors that we play in. So we are on a very good path at this point in time.
Anish, always a pleasure speaking with you. Anish Shah, MD and CEO at Mahindra Group. Now, India's been trading for about 2 minutes now. It is under pressure at the get-go, down about 0.2% as we speak. Front and center, of course, is the Indian rupee, which tested new record lows just yesterday. We're keeping an eye on that 88 level to the USD. Sensex currently down about 0.1%. Nifty Bank Index also in negative territory. Remember that the banks have somewhat been beneficiaries of late, but today not to be. It is lower as a group by about 0.4%. Still to come, Elon Musk has OpenAI in its sights, leading a $97 billion bid for the AI company. We'll have more on Sam Altman's swift response next. Keep it here with us. This is Bloomberg. Well, OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the non-profit that controls the ChatGPT creator. Let's get more with our tech reporter, Annabelle Julius. And Belle, not a day passes by with us not talking about Elon Musk. It is an unsolicited bid, so Altman says no thanks.
Yeah, and I guess you can kind of see why he might say that on a range of different metrics. I mean, even if you just think at sort of the latest valuations for OpenAI that have been mooted, you're talking around maybe $300 billion. So aside from perhaps the more personal grievances between Elon Musk and Sam Altman, there's also just that valuation in itself that might not have been enough to impress. So as you said, this bid, Elon Musk's XAI, his own AI startup, would have been leading with that or behind that, but essentially a consortium of different investors putting forward an offer of $97.4 billion. There you're seeing the response. Sam Altman taking to X, the social media platform, of course, owned by Elon Musk, to say, as you said, no, thank you. But they can, of course, buy Twitter. So they're obviously in jest there, but something to the reverse. So the bid, as it stood, would have essentially merged XAI and OpenAI. But of course, we know there's a lot of really intense competition within the foundational AI models, not least with DeepSeek rather entering the fray and really just causing even more sort of uncertainty for who's going to be the real winner out of all of this.
Belle, you really have to wonder how serious Musk is in making this bid.
Yeah, that's exactly it, Has. That part is sort of more difficult to see. Of course, I mean, he pursued that X acquisition a couple of years back, so he has, of course, you know, made deals in the past. But this one in particular, we've been speaking to different people out there, and they're saying maybe part of it is also to sort of draw attention to the path that OpenAI is trying to take. So we know that OpenAI, and this caused a lot of issues within the company going back to the end of 2023 that sort of spilled over into 2024. But there is this original structure of the OpenAI business where it's structured to be a non-for-profit. We know that Sam Altman is really leading that push to turn it into a for-profit structure instead. And so some of the people we've spoken to say that maybe part of this is about Elon Musk attempting to sort of make a statement of sorts and bring attention to the fact that OpenAI is still on this course. But certainly, it's sort of a long-standing feud. We know that Musk has initiated legal proceedings as well because he has concerns about essentially this transition that should be underway or could be underway.
As you said, I mean, you know, this creates some uncertainty for OpenAI's pact with Microsoft. What's the next course of action? What might be expected from here?
Well, I think it will still be sort of looking at that broader uncertainty between the transition, essentially, because, as I said, Elon Musk, Sam Altman, they've sort of been locked in this very long-standing feud over the direction that OpenAI takes. And so Elon Musk is saying that OpenAI has basically, at this point, abandoned any sort of pretense of being, you know, a charity, or not a charity, but a non-for-profit of sorts that would work for the benefit and for social good. That was what he was saying, that if they did actually manage to push through that acquisition, he would return OpenAI to being an open source, safety-focused force instead. So I think it will still just really hinge on those sorts of proceedings.
What a chaotic world, Belle. Bloomberg Tech reporter Annabelle Jewell is in Hong Kong. We thank you so much for your insights today. Now, before we go, a look at tomorrow's program. Marriott International's APEC President Rajiv Menon will be joining us exclusively to discuss their growth plans in the region, plus live coverage from India Energy Week in New Delhi. Keep it here with us. This is Bloomberg.